All right. Welcome back to the Economics of Real Estate. I'm Dylan Silbernagel. I'm joined as always with Matthew Gizzie. Today we are going to be talking about everything that happened on the Toronto real estate market for the month of January, where we've started out this year, as well as just some general news and everything that's been going on in the market. Obviously, tariffs and what's going on south of the border is a big part of that conversation. Matt, as always, thank you for joining me. How you doing today?
I'm good, buddy. I'm sick and tired of the cold. I hear we're getting a big snowstorm
I
tonight.
hear that too.
It's just piling on. You know what's funny? I had a client tell me that we were going to have a pretty tough winter this year because of the way that the amount of acorns that fell from the tree in her backyard. And I have to say, at first I was like, okay, but I think she's making a lot of sense here because this winter's been a hell of a lot worse than what we saw last year.
The acorns never lie.
Yep.
Yeah, we did a consult yesterday, and one of our clients has a plow operating company, and they were getting ready, getting all the trucks in order, making sure everything was serviced, because they did say that we expected, I think it was 20 to 30 centimeters or something like that coming in tonight. So, speaking of snow, though, nothing has been hit harder than that stretch of Highway 11. Everything around Aurelia going up to Gravenhurst. Just that lake effect this year coming off of Georgian Bay has been intense. They've had so many squalls. Just the other day, they had, bad accident up there. So, maybe there's something to be said about those acorns.
You know what? It's funny you say that. She was north of Barrie, so she was up in that area, and this was probably in September. And she said, "Matt, it's going to be a bad one this year. I can already tell."
Oh, there you
And
go.
she was bang on. So
Awesome. All right. Well, let's jump into it. Obviously, today we're going to be looking at Treb overall, GTA freehold and condo, York freehold and condo, Simcoe freehold and condo, Durham the same. We've got a nice rental report for you specifically as we talk about the impact that we're seeing for investors and the changes that we've seen in our immigration, the amount of people coming in, now that being cut off, the amount of people that are going to be leaving, and what that will mean. As we know, investors have, definitely in recent years, our more recent history, taken up bigger portions of the housing market. Even then going through the COVID years, as we saw, kind of mom and pop investors taking out HELOCs to take advantage of these things. And now we're sitting in situations where stuff isn't appraising when you're looking at the pre-construction, and you're looking at a lot of stuff that is just having a hard time carrying as interest rates have gone up. So we want to take a look at that. And we're going to talk tariffs because we know this is something that's on a lot of people's mind. Matt, I actually had a coaching call this morning for our Ignite program. And one of the agents on there had mentioned, like, I had two buyers that were looking that are now trying to slow things down a little bit because they're uncertain about tariffs. So we talked about how to handle those kinds of conversations and what that means for an end user. So nonetheless, we've got lots to talk about. And I want to throw it to you right away, jumping into just the talk of tariffs. You break it down for me here, and then I'll talk to you about how I see it kind of from an agent side of things.
yeah, so what I've put up here is just kind of what we're facing in terms of the tariffs, because there's been a lot of talk about this tariff and that tariff. So I wanted to kind of paint a picture of what we're really looking at here. So we've got the border security and the fentanyl tariffs. Those are potentially coming back on March 4th if Donald Trump feels that Canada hasn't done enough. Then we've got the new one, the aluminum and steel, where we're looking at 25% tariffs coming on March 12th. Now, the thing is, if they end up slapping tariffs because of the border and the fentanyl and doing 25%, let's say across the board, or 10% across the board, that's going to go on top of the 25% tariffs on the aluminum. So if they do 10% across the board on March 4th, aluminum could be 35% tariffs on the 12th, which is pretty significant.
Yeah.
Canada ships out the vast majority of our aluminum and steel to the U.S. economy. And then we've also got April 1st to look at. What the U.S. is doing a report to see where are all the trade imbalances and where can we potentially, what products can we potentially tariff for our benefit for the United States. So that's another one coming out on April 1st. And then why? Why are they all doing this? Well, Donald Trump's talked about an economic union with Canada, the 51st state. Um, Another thing is the taxes. He's promised his country a lot of tax cuts. And in order to pay for those, he's thinking that potentially he can do tariffs. So he's put a couple things out there. It's hard to tell exactly what Donald wants. I think he just wants better trade deals and also to pay for those taxes. But, you know, Canada does rely heavily on the United States as a trading partner. Unfortunately, we've gone kind of all in with them as our trading partner. And he's kind of exposing Canada that right now. He's exposing Canada because we don't really have a stable leadership at the federal level. So he's really grinding the gears to Canada right now, and it'll be interesting to see how this government responds to it.
Yeah, I think not to, again, now from my perspective, if I'm talking about it from the real estate agent side of things, and at the end of the day, we want to make sure that we're still giving great advice to people, right? And at the end of the day, uncertainty is not something that most markets enjoy. You know, stock market the same, housing market the same. When there's not a lot of buyer confidence, that can shake things up a little bit and leave it a little bit harder to make a decision. And we talked about this on our last call. Is at the end of the day, real estate agents are great at discerning the market of the moment and being able to evaluate what's going on currently, where your house might be for sale, or where you might be looking to make that purchase. And if those things all still point to you being able to what you want to achieve, try to let some of this noise get out of the way. Because at the end of the day, life doesn't care whether interest rates are up or what's going on with our economy. And there will be times where people need to move for whatever reason. And so we need to be able to still give advice for those people to make that decision. And it comes down to evaluating your local market. And even as we break down all these stats for the different areas that we're going to be looking at today, I want you to remember part of the reason why we're breaking it down further from what you see in the news is that these blanket statements do not serve you for your market, for the product that you have for sale. There's stuff that Matt and I have talked about where we look at and it's like, oh, okay, that's rough. There's a lot more active listings. We're up 48% in this area, 70% in that area. And then I look at a couple pockets where I'm working for sellers right now and I'm like, guys, there is nothing for sale like yours. It is a great time for you to be on the market, right? We've seen a couple homes sell over asking. We're going to talk a little bit about homes, the percentage of homes that are selling over asking versus not. And again, when you get into those local markets, things change dramatically. And Matt, I know that you agree as we take a look specifically at some of the opportunities specifically around Barrie and Simcoe that you've been watching.
Yeah,
Yeah.
absolutely. There's been quite the pullback there over the last little while. I think that the hollowing out on prices and people maybe coming back to the city from Barrie has already kind of happened there. And we're going to see in the charts that we could be potentially seeing a bottom and moving to the upside, especially when it comes to the detached market.
Yeah. All right. This one I think what it is really is it's a little bit of an alarm bell. It's a little bit of a flag. Let's talk about what this could mean in terms of what RBC is doing in the pre-construction space. And it's funny because part of this, I think they were pitching to buyers as a perk originally, right? And as we dig deeper into it, there's a little bit more concern as the markets switch. So I want to throw it to you, Matt, and talk to me a little bit about what Ben's talking here in regards to RBC and these blanket mortgages.
Yeah, so blanket mortgages are not anything new. They've been around for quite some time. Typically, they were used in the detached market where someone was going to move into the property in the next year or two. They could go in and say, we'll approve you for this price, we'll guarantee your mortgage, everything like that. But the difference, this more applies with the condo market. And you'll typically buy a place in maybe 5 or 6 years, it'll be finished. Well, you can't really do a blanket loan, 6 years down the road. So it's starting to come up that it seems like, especially potentially Royal Bank is giving out blanket loans on properties. So there was an article that came out with, from the Globe and Mail. So this one's Toronto buyer left in lurch as pre-construction condo now worth less. So he bought the property for 2.2 or 2.4 million dollars, and he went to a different lender and they assessed the property at $1.6 million. So he
Mhm.
went back to the builder and said, this place is only worth $1.6 million. You got to do something about this. And the builder went back to him and said, don't worry, just go to RBC. They will give you your mortgage for the 2.2 or $2.4 million. Don't worry about it. And he's like, screw that. I don't want to take on a mortgage at 2.2 when it's only worth 1.6. So he ended up not going through with it. But Ben Rabideau and a couple other individuals have definitely been talking since last summer. As they've been seeing this happen. We've been seeing it with clients, but none of the major news industries were kind of talking about it for whatever reason. Now they've finally come out. They've addressed that this is potentially going on in the market. What matters about this is that the banks are potentially giving people loans on properties that they've got no equity in. It's worth significantly less than what they purchase it for. They're packaging that up into a mortgage-backed security, and they're putting the risk on the CMHC, which is taxpayer funded and
Mhm.
a taxpayer funded entity. So we don't know how deep of an issue this is, uh, but we do know that there is plenty of condos that were purchased during the pandemic that aren't appraising anywhere close to what they
Yep.
purchased. So how are these buildings as wholes closing if individuals have to come up with all this extra down payment that they weren't planning on having? I don't know if we're seeing a seismic issue on the MLS. We're seeing, yes, active listings up, but you would think by now we would start to see whole buildings just flooding the market. And we're not seeing that because maybe the banks are bailing them out. Maybe it's the government bailing out these condo investors potentially.
Yeah, so I think it like to break it down in two sections. It's no matter what, it's not great for a condo buyer that now is looking to close on something they purchased a few years ago and it's not at value. Like that is horrible. That's a tough spot to be in. At the end of the day, these blanket mortgages are allowing them to close, though they're severely underwater in terms of what the value is. But the risk that we're talking about here is how is this getting now passed on if we've got all of these condos that now have these blanket mortgages that are closing, are able to close, which is great. But at the same point, all these people have no equity now in these products, and the banks are holding all that debt. And then, like you said, if they're passing it on to CMHC, there's the concern. So I think it's something that we continue to watch. But I think that this is just another kind of nail there in terms of like, hey, the condo market, there's some serious challenges going on right now, specifically because of where pre-construction pricing was.
Yeah, and what does worry me a little bit too is if tariffs were to come on board, and it was to significantly weaken the Canadian economy and the housing market in the short term. If this is what's already happening, how much worse could it potentially get? Because we still have a very large portion of condos being completed later this year.
Yeah. All right, let's jump into the overall all treb market insights looking back at January. Excuse me, the big percentages here I think that again have been in the news headlines is just looking at new listing volume, how much it's up in consideration in previous month, and then year over year. Obviously, here looking at the detached, not as alarming as some of the overall stats that we've seen in terms of our year over year. We are up 20%, but new listing volume up month over month is up 125%. Just a huge jump in terms of our new listings hitting the market. And some of that is the seasonality of December to January. It's it's not to be unexpected, but the numbers are a lot higher. And as we're looking at our median price, we're seeing slight decline in terms of our month over month, which is a little strange from December to January, and then year over year holding it pretty much level.
Yeah, typically you'd want to see an uptick in January. December is typically a slower time for sales, so that number is a little concerning that it's almost down 1%. But year
Mhm.
over year, uh, a, a minute uptick, which is better than another tick down year over year for sure.
Yeah. The last thing I'll say there is, a lot of the time people will use days on market as an indicator in terms of the health of the market. Are listings selling in a timely manner? And you see there that we're down in terms of our year-over-year numbers for days on market, which, kind of points to a good thing. But now with our new Habistat numbers, we're looking at this termination volume being up 41%. So that's that cancel and relist. And I think there's been a lot of people that were thinking this January might be like last January with a little less inventory, more people coming back into the market. It was a very different time last year, and I don't think that's where we are. And I think there's more people that are missing their pricing strategy this year than what we saw last year.
Well, I think with and we'll see it in some of the other charts, some areas have had such significant increases in new listings that you have to change your pricing strategy, because if you were the only house on the street and now there's three or four and they're all below you, you've got to start adjusting prices and being a little bit more realistic of where the prices might be right now.
Absolutely. Get my slide back up here. All right, taking a look at condos in terms of the new listing volume. Yeah, up month over month, up year over year. Our median price just down slightly, down that 3.7% in terms of our year over year numbers, which is, I think that's just been the continuation of the challenges we've seen. Honestly, like I was doing consultations with people in the summertime, and we were looking at numbers in the spring saying, hey, maybe we can get that. And I had to tell them, I'm like, look, even the spring of 2024 is not where we were now in terms of the condo market. It's had just a glut of inventory come out. And when buyers have that much choice to choose from, the way a seller can sell is by making themselves look so attractive via their price. Again, this is neighborhood specific, but at the same point, that's to be expected, that decline there that we're seeing in median price versus the same time last year.
Yeah, and again, for condos, 42% terminations are up 42% year over year. So a lot of price adjustments being there. The median list price, down 3.7 as people start to make those adjustments. And this is all areas covered by our stats. So I was in transactions volume down 9%, like you said. That's a decent shift down for the condo market. That's already seen from last year a big hollowing out.
Exactly. The fact to see it continue, I think, is the warning sign there in regards to the condo. All right, talk to me here about our new listing volume.
And this is new listings. This is all areas that Treb covers, all housing types. So we kind of wanted to get a general idea of just how much more volume we're seeing across the board in Ontario right now. And we can see that, from 2018 to 2024, it was pretty grouped in there. Like every year was a little bit more, but we've really detached from the rest of the group here for this year when it comes to total properties for sale. We're up 24% just from 2024. So big uptick in the new listings volume across the board for sure.
The only other time I remember seeing such a deviation in terms of months, like month over month throughout the years, is when our market takes off in price. That January starting point for average price, the first time I remember seeing a big jump like this coming through 2016 and into 2017, I'm like, oh, this is getting serious. Like our month over month and year over year increases should not be as steep as they are. And so to see this one up like this, it's curious to see what the rest of February will bring. Obviously, we have a partial line here as we talk about, our first 10 days in February, but this, of course, will go up. And what's interesting to see here, our new listing volume did not surpass our peaks of 2021 and even there 2022 in terms of volume until we got to the summer months. It was really in the summer months where we started to overhang. And again, the only thing that beat us there was COVID years in 2020. We had everything drop off in April from the lockdowns, right? March lockdowns happen. April, everybody stops, tries to figure out where we're going. And then once things started to open up there in July, really, we had a late, our spring market was in the summer for 2020, and there was that push. And then of course this is what a lot of this would typically look like when we're not going through such, I guess, transitioning years in the market, is they kind of fall in line. The fall market in terms of active listings has generally fallen in line with some slight deviations there. Yeah. All right, let's move on and start talking about our active listings. So, looking at new listings, that's what new listings hitting the market, coming out. Now we're talking about the amount of active listings, the amount of choice a buyer has to choose from when they're going to go take a look. And specifically, Matt, here we pulled Peel as an area where, like, okay, you've now seen some of the active listings and how we've carried on in previous years. But look at the increase that 2024 saw last year in terms of active listings. And that trend is following up quite substantially here as we come into January, 50% higher in terms of active listings than we were last year in Peel.
Yeah, I was going through different regions just trying to see what charts really stood out to me. And Peel all type homes really stood out to me. A 50% increase in active listings on the market right now. This is quite a big uptick for Peel right now. And this is a market that I'm going to be keeping my eye on quite closely to see just how much inventory we get piling on in that area.
Yeah, absolutely. So now taking a look at Peel in terms of our condo apartments and condo townhouses, similar story, up 52% in terms of active listings in comparison to the same time frame last year. Matt, up 113% in comparison to 2023. And you got to remember, like, our market started downturning in March of 2022 when those first interest rate hikes started to happen, when we got our first one. So even from 2023, where we had the majority of a year to start to feel that pain, there it is. Now, I will say this, that even though 2023, we were feeling it, it was really the fall of 2023 where we felt the biggest impact. So I say that, I guess, to say that this could get worse, if that makes sense,
Yeah,
in terms of active listings out there in Peel.
yeah. I thought the interesting part about this chart, like you said, was when you look at Peel all types, a lot of the other years were bunched together, but we can see two years of large separation for the condo market in the Peel region. So up 113%. That's quite a steep rise in the active listings there. And like you said, it actually, if you look at 2023 to 2024, the difference in paths those two took, and the amount of separation that we saw come summertime, geez, I can only imagine if we follow a similar path to last year, just how high this number could go. I think it could potentially go to 18 to 2,000 active listings if the sales don't significantly pick up as well.
Yeah. And so the big thing I take away here is there's obviously a lot of choice in the condo market for buyers that are out looking in Peel, and sellers. All the more importance that you've got to be nailing your pricing, because there's a lot of choice out there. Buyers are going to see a lot of properties and they're not just looking in one building anymore. So make sure, as an agent, when you're doing your CMAs, make sure that you're looking at the other options. What happens if they go 5 minutes across town? What kind of choice do they have? Because they got a lot. Right. And I think it's no longer that you can just look at the sale in your building from last month and say, hey, this still makes sense, when there's this much volume, this much choice for a buyer to choose from. Okay.
Yeah, the
Sales
next chart
volume.
here, Dylan, is
Yeah.
we've got all these active listings, 52% up, but we're having the worst year for transactions in January since
Yeah.
2018.
Yeah.
And this is what worries me about the active listing in the condo market, of just how bad it could potentially get. Because if you're having the worst sales potentially this year since, this
2018. Yeah.
particular stat system only goes back to 2018, but if you're not pulling some of those active listings out with sales, it could get quite high, and we could see quite the price adjustment happen in the condo market in Peel.
Yeah. And it's interesting because 2018, 2019, we were still feeling very much recovery from the fair housing plan, stress tests, all that got implemented there in 2017 when our market really slowed down. And it's just interesting to see that even in that recovery time, we're still so far below those in terms of the sales volume. So, it's another thing to be mindful of. Waterloo was another one that you picked out. And I think a part of this, the discussion needs to be, when we're looking at condos, some of these areas have been high investor areas, right? Looking at the Peel region, now coming out to Waterloo. and seeing that big increase in new listing volume, up 91% in the comparison the same time frame. We'll see where we pan out for the rest of it. But even looking at 2024, just how much higher we were, and you got to remember on one of the earlier charts where we were looking at this for Treb, we didn't surpass new listing volume until later on in the year in those charts. But it's almost the entire year where we've been up in terms of new listing when we look over 2024, and then especially where we're starting here in January of 2025.
Yeah, huge increase. Waterloo, some of it. I mean, a lot of people bought condos in Waterloo because it was a growth region. It was a region that I looked at for investment properties as well, because of the potential growth that was going to happen in that area. And clearly, there's been a little bit of a slowdown, and will be a little bit of a slowdown when it comes to international students in that area. But one of the things I do believe, when I was digging a little bit deeper into the size of the units that are taking up the market, it was actually 2 bedrooms that were mostly filling the market for the Waterloo area.
Interesting. Yeah. Interesting. A little bit of a different narrative when we talk about the Toronto market, where it's our small shoebox style investor, very high rental, student rental condos that were built that have been sitting because they just don't serve a family purpose. Now we're looking a little bit different here in Waterloo, where it's the 2 beds that aren't quite moving. I'd have to think that some of that is pricing based.
I think so as well. Yeah.
Yeah. All right, let's take a look over at our active listings. Ooh, up 109%, and steadily above in terms of where 2024 was in comparison to previous years for active condo listings. So kind of more of the same story. I don't want to beat a dead horse in terms of what's going on for our active listings there in Waterloo, but it's not good. There's a lot of choice again there for buyers. A little bit more challenging if you were one of those investors.
Yeah, I will say though, when it comes to the sales in this area, it isn't as bad as Peel. It's probably a little bit in the middle of the pack for sales from what we've seen in the last year. So it does have that going for it. But still, you're at 109% uptick from last year in the active listings. That will weigh on the market for sure.
Yeah, absolutely. Okay, so now let's pull into the GTA and take a look at our freehold homes, because at the end of the day, our freehold stuff, more and more, you can't look at the headlines where they include all home types. Because our condo market has been so sluggish, so flooded lately, you really got to make sure that you're pulling these two apart to take a look. Even when you're talking super high level like this, they need to be separated to get a better look at it. And, there's been a lot of talk, a lot of messaging, I'd say, from the Toronto Real Estate Board and some other places talking about making sure that homes this year are still going to outpace inflation. And when we look at our year over year here, we're just hovering above that at our 2.1 now in terms of median sale price for our detached, semi-detached, and townhomes in the GTA.
Yeah, price up 2.1. It's interesting because new listings are up almost 51%. Transaction volumes down 13.5%. Yet we still saw an uptick of 2.1 on the price, which was a little bit interesting of a stat for me, especially when you've got the termination volume 50% higher than it was last year as well. So I do wonder, when it comes to that year over year number of 2.1%, how much of that has to do with maybe the size of properties being sold right now. Is it more detached than it is towns and semis, because the underlying data is suggesting more options and less sales.
Yeah, I agree. And I had a conversation the other day with someone that said, well, we've been building such big homes, for a long time now. Is there any influence in the fact that just your average home is that much bigger? Right. So are we truly tracking the growth of that, or are we just seeing more and more of those homes sell every year as more of them now begin to turn over from pre-construction and stuff like that? So I think there's an element of that. But I will say that even in my neighborhood, watching and looking at the detached, we're definitely in a better spot this year than we were last year. So again, it's neighborhood specific. But at the same point, I would say that increase there probably still holds true for a lot of areas. Yeah, specifically when looking at the detached. Now looking at your towns and semis, depending on the sales volume, I think that's another thing that might be slightly skewed. Because I'm looking at, I want to have this conversation real quickly about the amount of homes that are selling above the asking price. And so you can see that here, that we're up this year over year, that 15%. Sorry, Matt, am I getting that right? Year over year, we're up 15%, right? Because we're now
For above list,
26.3%.
for over
Yeah.
asking, yeah,
Yeah,
we're
for
up
over
50.
asking. And I saw this true when I was looking at Aurora, for example, because I pulled these charts from my own areas as well. And we're up there as well in terms of the amount of homes they're selling over asking, but our sales are down so much in comparison to last year, specifically in that market. So I think when you see some of this stuff looking up, and you'll see there's a lot of people that are talking about that, at least in our echo chambers, that the percentage of homes over asking or selling is up. Well, you know what? There's always going to be those homes that will sell over the asking price. There's always going to be those A-plus homes that are on the quiet street, that back onto the ravine, that have the one floor plan that everybody likes, that buyers will line up for. And so those ones, the holding offer strategy can still work because there will be enough demand for that specific home that buyers will come out. Now, with the amount of sales volume going down, I think that these numbers are skewed because those homes are still selling, right? Those are in a down market. It's usually more of those homes that will sell than otherwise, because it's a great time for a move-up buyer to purchase one of those homes, because their home should have held value a little bit better than the higher priced home. Now one of these comes up for sale, boom, they're going for it. So Matt, if I was going to say why these numbers are up specifically in regards to the above asking percentages, that you got to watch those. I don't think it's a true indication of what's going on, the state of the market. I think you got to look at the amount of active listings and the amount of sales that are ultimately saying if that is a viable strategy for most people. Because when we look at our terminateds, I think people are getting it wrong.
Yeah, no, I fully agree with that.
Yeah. So let's keep moving on here in terms of our freehold report. And when we're looking at the bulk of where these homes are selling, in terms of our sales volume, we're seeing that between the million and 1.25 seems to be like a sweet spot for total sales volume. And then in terms of active listings, it's interesting enough, it's the price point just above that. So to me, that says that there's a lot of people are listing at that price point. They're negotiating down a little bit and buying around that 125, which again holds true to the amount of homes that are selling under the asking price for the most part.
Yeah, and what stands out to me as well, you've got your active listings by price range, 2 million plus. You've got over 1,200 properties sitting on the market, and last month there was 211 sales. Now, just so everybody knows, these stats are from January 1st up until February 11th. So it's just kind of seeing how the full year has gone, and then active listings is from January last year till now, just in case there's anything that's been sitting on the market for a long period of time. And it's something we've seen all year. There's just a lot of that high end stuff sitting out there that needs to kind of trickle down, I think, a little bit.
Yeah, and when we look at the sales volume where the bulk is happening, it's still your detached homes, 67% of the market, townhomes coming in there at 17, semis at 15. When we look at what's active, it just makes sense. We have so many freehold detached homes out there in the GTA, but 76% of the active listings are in the detached segment currently. Okay, taking a look at active listings again. We're just talking about our freeholds, specifically our detached semi and townhomes, and you can see, like we mentioned before, it wasn't till the summer that we really turned over in terms of active listings being the highest they've been. And Matt, you and I were talking about this back in April, that when you were looking at the growth in active listings, the condo market was at an all-time high. But we were saying, hey, even in comparison to some of the other markets after adjustments, detached and the freehold market is not looking that bad. Like it really had kind of maintained, and really it wasn't until that August and July where we really kind of rolled over in terms of our second highest year there for active listings. So I don't know. I think at the end of the day, the freehold stuff is just faring better in these types of markets.
Yeah, I mean, we've underbuilt it for so many years that it's a high. I think a lot of people come to Canada because they want to own their own home. They don't want to potentially live in a condo. So And when you come to Canada, it's Southern Ontario that typically you want to put your roots in.
Mhm.
And looking at Peel and then to GTA as a whole, you can see that there's still a lot of areas that are quite strong when it comes detached.
Yeah, yeah, absolutely. Sales volume. So here's again where we see a big drop off in comparison to other years. So now we're looking at all the way back to 2018, how our sales volume typically pans out throughout the year. And 2025, we're starting near the bottom of that, right? We're just not there. And obviously, this start into February, this could change. This is just based on month to date so far. But I love that you highlighted here 2020, where we had that late spring push actually be in the summertime because of what had happened with COVID.
Yeah, I highlighted that for two reasons. One, for that, it was a COVID push. Everything got kind of pushed back because of the early beginning of the year with the pandemic. But also, when it comes to refinances this year, it won't be till
Mhm.
later in the year where all these people that purchased uh, homes will be refinancing. And in the GTA alone, we're almost around 10,000 there now, so you're maybe looking around 30,000 individuals that need to refinance. But I also did the May stats here to kind of potentially project of where we might have sales in the GTA. So we've got the second lowest amount of sales since 2018 in January. I think if we kind of follow that yellow line, the 2019, I think we'll be just a little bit below that, maybe. So maybe we're going to be in the 7,000 range for sales in the GTA come May, and I would imagine that's maybe where we're going to peak. I don't know, maybe we peak sooner, but I feel like the last 2 years we kind of peaked early in the year, where like a lot of stuff came a little bit quicker. Um, but I don't know. I kind of see from the data that maybe this is something that's going to be pushed further because of tariff news, tariff concerns. If that's going to happen in March, then maybe we'll see a May and a June push in the market as people adjust to what may or may not come of that.
Yeah, I think that's fair to say, and it's not unheard of that we have those later pushes. I mean, you can see the sales volume here was kind of on that trend. Obviously, 2020 a little bit different, but even here in 2023, peaking a little bit earlier, or maybe 2022 peaking earlier, in 2021 peaking up here, and then it says as opposed to our later pushes. And if we look at 2019, again, they're peaking in May, so it fluctuates. I'd say that kind of that May to June in terms of overall sales volume is usually safe bet. Sometimes as early as April, but our average price does tend to be a little bit later in the spring as home transactions stack on top of each other. Right? If we're in a positive growth market, we see that stack up, and that will be a little bit later. And that always comes down to a conversation with your sellers or homeowners that are wondering. They say, "When's the best time to sell my house?" And when you look at those stats, it does trend to be a little bit later, but that's just a stat. It has nothing to do with where you guys are, because there's total sales volume that makes the difference. But also, if you're going out there and we're comparing this to active listings, do you want to be the house out there when there's 10 others, 15 others in your direct neighborhood as opposed to two or three? Like, that's the impact that could hurt your home price more so than any of this stuff, right? I think it's important that people remember that. Beautiful. Median sale price. You know, Looking at 2024 here, they, it's kind of, we got kind of a nice little leveling off with a little bit of an uptick there at the end.
Yeah, I think like we've started the January just above 23, 24, and 2021.
Yeah.
It does look like we might dip. It's still too early in February to tell where we're going to end up here. If it was then today, we'd be down over the 2024 and 2023. I do think that number will probably climb pretty close to 2023 numbers. What's interesting about this chart is you've got the 3 years at the bottom and then the 4 years at the top. So you've got pre-COVID and then you've
Yeah.
got COVID and above, and you can see that gap up from 2019, 2018, 2020, and then the gap up above that. It's just purely based on the amount of money that got driven into the economy, made the housing
Hmm.
prices go higher. And then looking at 2022's peak out there, just the disconnect that it got from the market. And when you have super low interest rates, that's what happens. You get a rush of individuals that want to get into the housing market. But
Yeah.
now we've come back to a range, and it'll be interesting to see if we can get over the 2023 price range. But my guess is, like I said, maybe between April and June is when we're going to peak out in the price and kind of see where this market for the GTA ends up.
Yeah, I mean the forecast is still, I think, from the Toronto Real Estate Board, hovering around that 2.1, 2.2% growth is what they announced in their outlook. So we should be above that by year's end, and perhaps this spring that we're in might just be that little bit of doubt that doesn't quite carry through. Obviously, January we're seeing in a lot of ways didn't perform, perhaps where you may have bet, 3-4 months ago about what you thought January would have done. Obviously, the stuff happening in the south of us being the big impact there. And a nice comment here from Stacy saying the same thing. I feel this way about 2025, a delay in sales with all that's happening. So maybe we do see that later push in regards to home sales. And the question will be, do we stack up? I think my question will be, do we stack up too many active listings for when the buyers actually return, that it might impact our sales price by the time that happens because of the buyer choice that we're seeing?
I think when we look at interest rates later in the episode,
In our deck here, yep.
um, we're still in a fairly restrictive range as to where we've seen interest rates in the past. So,
Yeah.
So surely there is a lot of people out there that have to ask themselves, and it might be mostly investors, can I afford to keep this secondary property right now? And I think that's what might keep the active and the new listings at a high.
Yeah. I mean, we have seen updates in terms of the forecast for the amount of cuts that we might see. That could be the difference maker. Now, this one, Matt, you and I talked about months of inventory and how we're kind of bucking the trend here for January. So as you see all these blue lines, they represent January at the start of every year. And when you take a look at where we are here in 2025, obviously not only are our months of inventory trending upwards since 2022, but take a look at that steep line. Let me get my cursor up here. Look at this steep line in terms of months of inventory now that we're coming into 2025 in comparison to the direction that we're going in other ones. And Matt, I
Yeah,
think this was a fantastic slide to include here.
I stumbled across this. 2018, we were heading into the year with falling months of inventory. 2019, same. 2020, the same. 2021, a little uptick, but nothing much, and then heading downwards. 2022, a slight uptick, but we were also coming off a very low bottom.
Record lows. I think that just naturally found a bottom, right?
Yeah.
Yeah.
So, okay, we're heading upwards, but it wasn't this massive uptick. It was, just a small one compared to what we're seeing. And then 2023, again, going into the year with falling months of inventory. 2024, a big chunk, like a huge fall in months of inventory. And then we come to 2025 and we're starting the year with a giant uptick in months of inventory. So this is kind of some of the underlying data where you got to look and say, okay, you know what, this year is going to be different than a lot of the other years. We're starting off the year with more supply, and the stats are there, and it shows.
Yeah, absolutely. Startling anytime we see graphs with such big spikes, such big upticks, right? And it's funny because you look at 2020 when March happened, right? And the sales dropped off, but look at how short that lasted. And then we immediately dropped down. So there are some other times where we're getting steep lines, but they don't necessarily last. And this is, you gotta remember, this area here, interest rate hikes one after another. Like they just kind of kept coming at us for that year. And I think that's where you're seeing the signs. Now, taking a look at the GTA condo market, and Matt, I think that looking at, new listing volume, specifically month over month, this one I've seen thrown out there a couple of times, 139% increase in terms of that new listing volume. So Um, I don't know, man. What are your big takeaways here on this one? Not to get too lost in the weeds on what's going on in the condo market, but there is a lot of condo owners out there that this matters to.
Yeah, I think typically you're going to see a big number of month over month increases for new listings from December to January, just based on a lot of people don't want to list in December. And I think a lot of people also got in early in January because they are worried about maybe tariffs. They're worried about the economy. They're worried about a lot of things. So, uh, it's fair to see a big number like that. But going over year, a 38% increase on condos, 37% on condo towns. Those are some decent size increases, and they're decent size increases because the year prior to that we saw the same thing. Like, the condo market's been in this same scenario for over a year now. So seeing compounding on top of that another 38%, is alarming. You're down 2% year over year. You're flat from December to January, which is a good sign. Whereas condo towns, you did see a bump up 2.1%.
Yeah, and medium
Uh,
price, not bad.
yeah. But the big thing that sticks out for me with condos as well is year over year, you're down 16% in transactions
Yeah,
for condos.
yeah, for the condo apartments. Yeah, I think that's important to note. We did see a slight decline. Well, maybe not slight, but in comparison, a slight decline of 9% when looking at the condo townhouses as opposed to the actual apartment units. But yeah, I think the story of the condo, in this post high interest rate environment, is there. All right, so let's talk active listings. Let's talk active
Yeah. So,
listings here for our condos. Now, this does include towns and apartments together.
yeah. So we saw a 38% increase over 2024. But when we go back to 2023, like I was saying earlier, we've seen 2 years of this compounding. So we're
Yeah.
actually up 86% for active listings in the condo market over the last 2 years.
Yeah. Yeah, and again, that just continued all the way through the year, and it's a substantial amount more than what we've seen in previous years. Like, the gap in terms of active listings to what we're used to, it's really been up there. It's interesting to see it, of course, trail off. I'm sure that is, some frustration from sellers in the market pulling some stuff down. Um, you know, and of course seasonality, right? Like, there's the trend. It follows similarly. But to start out the year here in 2025, it's just increasing from what we're used to. All right, let's come back to York and talk about the free. Excuse me. Let's talk about the freehold market in York. So, as we're looking at our detached semis and towns, now this is all of York region. When we're taking a look at our median price, we did see a decline month over month and as well year over year. So, going back to what we saw in some of the other areas in GTA overall, where stuff was a little bit more closer to zero change, we're seeing now a 3% drop there in terms of median price in terms of the same month last year. Gizzie, when I take a look at new listings, you can't help but acknowledge that the amount of buyer choice is got to be impacting those prices when we see new listing volume being up 148% when we compare our month over month, and then up 45% when we're comparing year over year. And it's funny because that was the same number that we were seeing as we moved down of December, right? In comparison to where we were, and what we were starting the year with was hovering around that 45 to 50% mark in a lot of areas. And here we're seeing it again in York.
Yeah, if you were to show me the month over month and the year over year percentages, at first I would tell you that has to be the condo market,
Yeah.
and maybe not the detached market. But yeah, like a 3.3% decrease in the median price for homes, 21% decrease in sales, new listings volume up 45%, and even the termination volume, 57% of homes being terminated and potentially relisted. These are some pretty significant numbers to keep an eye on for York region, and seeing how this plays out into February, because that's a lot slower start to the year than I was expecting for detached.
Yeah, absolutely. And so just to add real quick, great comment here from Dina. Can you please send me this chart? Absolutely. Anybody that is interested in this, just comment yes on the video wherever you're watching this, and we will be sure to get you a copy of this chart for you. I think it's a fantastic thing to sit down with your clients and take a look at. And Matt, like you said, it's startling when you first look at this. You're like, I thought this was the condo market, but it's the freehold. It's our detached semis and towns that we're taking a look at where we're seeing this change. And now, not to alarm anybody, again, go back to your local markets. We've seen some areas perform really well in January, like fantastically. Stuff where I had to pick up the phone and call my guys and say, guys, it's looking really good right now. All that doom and gloom we were seeing a few months ago, we finally found a change here. So again, watch your stuff, but this is now getting more local to your home if you live in York. We've now moved away from GTA as a whole. We've got rid of some of that stuff. We've come down. Now we're looking at York. And when we're looking at these freehold numbers, there they are. There they are. The increases are in buyer's choice and the declines are in sales volume and median price, right?
I think for helping with sellers in this market when we're seeing such a big uptick in the new listings and the active listings is, you really have to vet your seller for one, making sure that they've got enough equity in the property, making sure that they're motivated to sell is more important than ever right now, because there's going to be a lot of competition out there potentially, depending on what area they're in, and making sure that you're picking up the right clients and making sure that they're going to actually move forward with the sale of their property in this specific market. And number two, they're motivated to do what it takes to be competitive on the market as well. Because if they're not, and there's a lot of competition out there, that property is going to sit there for potentially some time if these data points don't get any better.
Matt, I'm so glad you brought that up. This has been a conversation for real estate agents, and really homeowners should be thinking about this as well. But specifically in the last couple of years, that things have gotten sluggish. Not every home sells. More and more, you need to be working with the motivated people. More and more as a homeowner, you have to decide, am I committed to selling to get what I want? Because to be honest, when you're half in, half out, and then you make the wrong decision on a purchase because it's the one you wanted, but you're half in and half out on what you should do on your sale, you end up in a bad spot. So you got to have a clear goal that you're working towards, and you got to be working with realistic numbers. And agents, this is something that they've been wondering about a lot in the last recent years because we invest a lot of money in taking our listings, right? There's all the photography, all the drone stuff, all the walkthroughs. You're hiring at least 3 or 4 different little industries to help you market that listing. And then if you're including staging where you're upwards of $4,000 on almost anything, all my condos have been $4,000 plus this year to stage as well. And if you're taking on a listing that's going to end up in the amount of terminateds that we saw on some of those last charts, or the amount of price reductions or just homes not selling, you're leaving yourself very exposed in your business to the amount of risk and loss that you could potentially take there. So it's very important, like as you're saying, Matt, we're looking at these numbers. You got to make sure you've got clear motivation, a clear plan, working with realistic numbers to get that home sold. Now, I want to jump back into this and take a look at sales volume. I know active listings is first, but I immediately jumped to sales volume because I want to see where's the most amount of transactions taking place right now in York region. And then it's that, just like we saw over, I think it was in Peel, that million to 125, or it might even have been GTA overall. Million to 125 is where we're seeing the bulk of our freehold activity right now across our detached and semis. Oh, and excuse me, actually, we do have condo towns and apartments in on this chart. I'm just noticing there as well. But still, nonetheless, that being said, we're still seeing the bulk between the million and the 125, and when we're looking at active listings, again, seeing 125 up to 15. So it's typically, when we're looking at active listings, the bulk is in one category, and then the sales is the one just below that, is where we're seeing all of the sales activity take place. And it's interesting to see, like you said, Matt, the stuff over 2 million, piling up there in terms of our actives with our highest of all things. You used to think the luxury market was a smaller market, and it's just not the case anymore. So when we talk about price growth and stuff like that year over year, are more of these big homes selling? And when we come down here, 60 units is actually not that bad in comparison to some of the other stuff that we're looking at. I mean, it's not great. We know that they are stacking up there, but nonetheless, it's interesting to see that we're still seeing a good chunk of volume move through there.
Yep.
Yeah. And of course, breaking it down, median sale price by location. Now, of course, this one we're back just looking at our freeholds, so detached semis and towns. King coming in the highest at 2.3, Richmond Hill at 159, Markham at 1372, Vaughan and then Aurora. And it's interesting to see because I would say that that's probably how I would have pegged it. Other than I might have bumped Vaughan just a little bit higher on that chart. And I'm so glad that when we did it this time, we removed the condos so as not to sway that because we saw so many condos when we were breaking this down last time. And sure enough, Vaughan has moved up the list. Yeah. Awesome. All right,
Yep.
let's slide on to the next one, taking at our new listing volume here across town semis, and this is of course still in York region. We have seen, it's not as high in York as it's been in other places. We just looked at a bunch of stuff in the condos, and then looking down at Peel, we were seeing dramatic increases in terms of new listing volume for the month of January, and funny enough, we're below 2019 numbers and we're below 2018 numbers for new listings. Matt, I have a feeling when we take a look at active listings, it'll be a different story. But nonetheless, looking at new listings, not the highest we've been.
No, you know what? Active listings is going to come probably around the same, but I think what's the big takeaway here is 2024 started the year extremely like soft.
Yeah.
We were only at 1,022 new listings compared to 1,600 for 2018 and 2019. So I guess the big reason why we're seeing such an uptick in active or new listing percentages is just because of how soft 2024 was, and I think that's why we also saw
Yeah.
a pretty decent market for price wise in January, February last year was just because of how few homes were actually on the market compared to what we've seen in the
Yeah.
last couple of years. But I think it's a good takeaway that we are below what we're seeing in 2018, 2019 for active listings. But we're probably going to follow that trend line of where those two areas were because they had rates that we're probably going to see this year in the 2.5 range. So I think as far as new listings, we should see the 2018, 2019 numbers this year.
Yeah. And we've talked about this a couple of times now. The people that came into 2025 thinking it was going to be January 2024 all over again, that's why we're seeing that amount of terminateds. And looking at this chart, it shows clearly that 2024 was almost an anomaly in terms of the amount of new listings that were coming out in comparison to even previous years, right? We did see multiple offers in 2024 rolling comfortably through January and February. Even March, it was starting to struggle just a little bit, but that's because there wasn't as much inventory out there as we'd seen in previous years. And this year, again, we're just not starting at that point. So it's important to remember. And then now when we come here to active listings, same thing, 2024, right over here, is lower than some of the previous years that we had seen. And sure enough, here we are again this year, comfortably over that. This is now specifically, again, just a reminder, looking at York, detached semis and towns. Yeah. Matt, I think that it'll be interesting to see if, okay, we're starting a little bit higher. This is true. Are we going to see the run up that we saw through the later half of the spring here? Or kind of as we were talking about there with Stacy, are we going to see maybe a little bit of a rollover because the number of sales is going to uptick? If we have a later push for our sales volume for when buyers are like, all right, I'm feeling good. We've gotten news that came out in March and April about what was going on south of the border. We've now got another rate cut under our belt, likely another one coming in June or July. I'm okay to come into the market now. I'm feeling good. I know you and I have broke down the buyer confidence charts that we've gotten previously. I don't think we have them out here for today, but it'll be interesting to see if that's starting to trend upward come those months. I don't think we're there now. If anything, we've probably seen a continuing decline there. But I think that we could buck this trend just a little bit when we're referring to active listings, because I think hopefully more sales volume should pick up around this time.
Yeah, something tells me we're going to hover pretty close to where the 2019 yellow line is. Just because like 2018 and 2019, we had rates that came off extreme lows and the market was struggling with those quite a bit, and we can see it in the active listing stats.
Yep.
We're still going to be above those interest rates that we saw in 2018 and 2019. So there's still areas of concern in the market where like we're just not low enough potentially in the interest rate section to really drive a significant amount of sales, and we're starting the year at a really low bottom. So I don't know. I think we're probably going to follow that yellow line. We'll be below it, probably below it a little bit. But that's my base case. So we'll see.
I like it. I like it. We'll watch and see where we end up and what kind of impact we have there. Now,
because here's the sales volume, right? You're
yeah,
starting
I
at
was just
the
saying the
lowest
same
since
thing.
2018. And, I feel like, again, we're going to probably follow the 2019 line, maybe even between the 2018 and the 2019, somewhere in that range there. So,
Yeah. So I'm right there with you. I think that if we can stay closer to that 2019 line in terms of our sales volume, hopefully we're going to see that turnaround. I mean, we're starting around a similar point here. But perhaps if we're up higher there in terms of our sales volume, maybe we'll see those active listings trend just that little bit lower. I mean, we want to outpace at the end of the day. We want to outpace what 2024 did. We'll see how that pans out. I think that, potentially the start to the year, how we're already below that, it's not the start I think we were necessarily looking for. But it's something that we'll watch. And like we said, maybe we just get a push a little bit later through the spring and, go leading into what the summer market would be. Okay, York condos. Let's take a look here. And I think, a little bit more of the tail that we've seen across the board when talking about some of this stuff. We talked about the freeholds being up year over year, 45%. And here we are, our jump up to 55% year over year when looking at our new listing volume coming out. Median price year over year down 1.5%. I mean, that holds true to me, especially when we're looking at that median price of 633. That range keeps coming up when I'm looking at condos. Month over month, slight decrease from where we were there in December. New listing volume month over month. Like we said, the seasonality of going from December to January, we're looking there up 182%. That is a big jump. There's no denying that. Even with the seasonality of it, that's a big jump in terms of new listing volume when we're talking about condos in York Region.
It's a huge jump, and we'll see what the jump is from January to February when this month's stats come out. But again, you're 55% above the new listings volume from last year, which was I don't know if I have a chart for it, but probably a lot higher than it was the year prior to that one. Mm-hmm. So that's a big number to see in the condo space that's already moved that much. You can also see the percentage above list price, so the amount of offers they received over, down 34%. And then termination volume, 68.7 terminations, or sorry, almost 69%,
yeah,
of them terminated. So again, if you're dealing with clients in the condo market, you better be vetting them and finding out and asking the right questions, because I think it's going to be a really tough year for the condo market, and just based on the numbers we're seeing out of York Region so far, it's probably going to hold true in York Region. And just making sure that you're getting to the bottom of their motivation and ensuring that they're going to be competitive when you put their property out there is I think critical.
Yeah. And, shout out to Dina and Stacy who are watching this video live with us now and joining in. I remember having a great conversation with Dina about how much consultation time we were spending with our clients regarding the condo market, because we were just seeing these listings last year not moving at all. And the amount of effort and time that we put into servicing our clients is, above and beyond. But the reason why we have to go above and beyond these days is because of the amount of inventory that we're seeing on these signs. Like, there's so much competition out there. So you want to make sure you're working with one of these fantastic agents that takes the time to evaluate and position you in a place. Like like I said, when we talk about making sure you're working with the motivated, because the costs that you invest, the investment money that you put up front in regards to staging, sometimes, like I said, my last two condos alone were 4,000 just for the staging, and it's not like they're huge penthouse condos, right? That's just one of the things that we're doing. So, um, it's I would have loved to see the year over year go a little bit differently, but I think with all the sluggishness that we felt last year, I mean, to only be down 1.5%, you could almost look at that as a win, to be honest, especially when we're talking about York. And I don't think York suffers the same plague of investment built condos the way that Toronto does, especially when you're looking at the core. Did we build a little bit smaller here? Yeah, absolutely. I'm consulting with people that are ready to downsize in Richmond Hill, and they only want to look at the old buildings because the old buildings are the only ones with decent square footage, right? So it is a challenge of where we moved in terms of our building. We're not building family sized condos in that same way that we used to. But anyways, I don't know. That's just part of the conversation in terms of why I think York has held up perhaps a little bit better than what you're seeing in the core. Okay, Matt, talk to me here. You know how I love going to sales first, but I'm gonna throw it to you while I have a sip of this coffee.
Yeah. So as far as sales volume, you can see the bulk of the sales has happened between 500 and five to $600,000 with 65 sales. Now, if we go back to, and this, or just a reminder, this is full year up until about February 11th. Now, if we go back to the active listings, we're at 239, and 600 to 700,000 is 229 with only 46 sales. So, like we mentioned earlier, when it comes to uh, you know a pricing cohort that needs to potentially shift to the downside, that 600 to $700,000 range might have to start moving its way down to where we're seeing the bulk of the buyers. I mean, there still is some decent buying going on between 6 and 700,000,
Yeah,
but anything north of that's really really sluggish as well when it comes to sales.
yeah, I agree. Now here, Stacy had a question. Let me pull this up just for a second. Asking here, any idea how many of these actives would be new construction? So stuff. Obviously, what we're looking at here, Stacy, is everything that is on the Toronto Real Estate Board in the resale world. None of that pre-con stuff is typically allowed on there in terms of assignments. So it would all be now stuff that's closed on. I If you're asking if anything that's closed like within the year, um, don't have that data in terms of these charts in regards to how many of that stuff is like brand new that's just closed and being resold potentially with nobody ever actually moving in, right?
You know what? It's a great point by Stacy, because it is a stat that I think a lot of people want to know
Mhm.
is how much of this is pretty new and getting moved onto the market. And
Yeah.
I'll definitely be looking to see if there's a way to access that kind of information, because I think a lot of people would want to know.
Yeah, because what that says to me as well when I'm looking at is how many of these condos in York regions were bought by pure investors, perhaps even speculators, in the sense of like, hey, they never really had intention to close on it. Because in Toronto, that's not an uncommon thing. And unfortunately, there was some stuff going around in the news and the real estate chats. The amount of mom and pop investors that just got over leveraged because in the good years, they were able to buy a bunch of those pre-cons with minimal money down, and then they never closed on them. They would sell them on assignment, flip them beforehand, make their profit, and walk away. And now, as we're seeing that a lot of those aren't appraising, there's too many of them. Even the assignment market is getting flooded with options at this point. Those just aren't happening the same way. So I think more of them are closing these days. At the end of the day, they're either closing or, like we saw with Mark Morris there, a few people are being advised, hey, just don't close on these things because you're never going to get out from under them.
Yeah, yeah.
Yeah.
I If you're going to close on something that's worth $200,000-300,000 less than
Yeah.
what you are paying for. Yeah, it's a bit of an issue there. There are a bunch of Facebook groups for assignment sales, actually, and you can follow along with them to just see the amount that are being piled on through those Facebook groups.
Yeah, absolutely. Taking a look at new listing volumes here for our condos in York Region. Again, big increase in terms of our year over year. Let me get my cursor back there. Yeah, up 40% in terms of January to January from where we were in terms of our active listings. Be interesting to see how this pans out. I'm assuming, like you, Matt, that specifically in the condo world, we're going to see this trend continue. It's interesting that when we look at 2024, it didn't surpass 2022 until after the rates started to happen. So I think what was happening here, when I look at new listings running up before March, this is still a very hot market where people are making those moves upwards. I think everybody's listing to take their next step into the townhome market. And then we see the rollover in 2022 as we start to see our rate cuts start to happen. As we talk active listings, look at 2024 for York Region. This was the stuff that was in the headlines the whole way through. All the data that you and I were looking at just consistently, the amount of active listings in the condo market is something like we'd never seen before, and York was not immune to it.
Well, what's really interesting here is, we're 2024 from 2023 was actually a big jump. Because what year is that? That's in the middle. 2019 is just below the green line there. But if we look where the green line was, so 2024 to 2023, look how much of a gap that is in the summer months for supply there. And now we're 44% higher than we were to start the year in from 2024. So how much of a stretch is that going to be from in the summertime from 2023 now to 2025 numbers if we follow a similar path?
You know what I will say about this, to talk about the bright side for a minute? Downsizing in these hot markets has been really hard for people. And we talked a lot about people getting trapped in equity in their home because there's nowhere to go. Because it used to be you could sell your trophy home, your detached 2-story big house, and then move to a nice little bungalow or move to a nice condo, and you were able to pocket a lot of your equity, to save for retirement. And what happened specifically after COVID, but even the run up to 2017, is a lot of those homes were appreciating in value so quickly too, because everybody was just trying to buy something. There was not enough out there for people to buy. We had a shortage. And so now, at least with this gap, like if you're, and we've seen the turnover in terms of pricing for condos, I think there's at least more opportunity for our downsizers. And so that would be something that I think more people should be having a conversation with. If you have been thinking about downsizing, we're seeing the detached markets hold pretty steady, condo markets taking a hit. Maybe now is the time. If that's something that you're going to be doing anyway, get into it now before these things turn around. I mean, I don't mean you don't need to do it right now, because I think this is going to continue for a little bit. But I think that's the cool thing, is that there's more opportunity now for those people to have those kind of discussions.
Yeah, that's a great point, Dylan. I really think that's a great opportunity for individuals, like you said, to get some of that equity out of their property and downsize. And you know what? You can never time the bottom of a market. It's
No.
next to impossible to do. And what we're seeing is, there's probably at some point this year, there's going to be a fantastic entry point for you, just based on the amount of active listings and the decreased sales, that there's going to be deals to be had for those who are out there looking and negotiating.
Yeah, absolutely. All right, Simcoe, it's about time, coming into our freehold market just north of us here. And, we've talked a lot about, I think Simcoe got hit early in terms of how they were doing. And one of our last videos, we were looking at like, oh, they're kind of down there. They should be leveling off now, but they continue to take another hit. But at least now, when we're looking at our year over year here in terms of median price, those guys in Simcoe are up just that little bit. They're up 3%. They're actually outpacing kind of what we saw there in York. So it's nice to see for Simcoe in particular, month over month, the decline. And I think that's just the weird start that we've had in January for this year. And I think a lot of that comes, of course, with the news and the uncertainty that we're seeing, that people aren't out there like they would have been otherwise. But to be up year over year 3% in the freehold market there in Simcoe, I think is a fantastic thing for the homeowners in Simcoe.
It's great. And the transaction volume, it's only down 3%, whereas in other areas we're seeing 10, 15%.
Yeah.
New listings volume only up 6.7%, where we're seeing, in York region, we're seeing, what was it, like 40%?
Yeah.
We 55% in new listings, so to be only at 6, so the underlying data here is telling me that we should see a strengthening market in the Simcoe area, because we're not getting a massive decrease in sales, and we're not getting a huge supply in new listings.
Yeah.
Terminations are only 10% instead of
Only
50.
10%.
So the pricing is more in line with where buyers want to be, I think, in the Simcoe market.
Yep. Yeah, absolutely. Month over month, that makes sense to me that it's down. We're just starting the new year. We've got our new listings are out. That makes sense. But again, looking year over year, interesting to see that it's only up 10% in comparison to other areas that we have looked at. Now, when we take a look at our active listings, again, we're in Simcoe, detached semis and towns. We're seeing a big bulk in that million to 125. This is the same price point we've seen in a lot of areas where the bulk of the homes are sitting right now. Now, the big difference here is the bulk of the sales are sitting from 700 to 800,000. Fantastic opportunity to be buying a freehold home in Simcoe, well below the $1,000,000, and that's where the bulk of the stuff is selling. It's interesting to see, again, coming across to median sale price. When we're looking at our locations, Tiny coming in at the top at 1,175,000, Bradford below that at 1,111,000. Springwater, Ramera, Barry at 760, down the list there. So it's interesting to see where these opportunities and where the options are for people to get in at different price points in the Simcoe area.
I think the one red flag for the Simcoe area is there's still on the high end far too much supply in the higher end to what we're seeing in sales. 157
Yeah.
active listings, 2 million plus with only 10 sales. 1.25 to 1.5, 208 active listings, 60 sales. So it's a little bit stronger there. But then actually 900 to a million, 40 sales with 200 active listings. So on the higher side
Yeah.
in Simcoe, there's still a little bit of challenge there to see if I think a lot of that supply's got to adjust their prices a little bit.
Yeah. Yeah. And interesting to see, like you said, the terminations being down in Simcoe in general, and our days on market year over year have come down as well. We're down that 11%. When we're looking at days on market month over month, it is creeping up just a little bit there. Okay, looking at new listings volume, interesting to see that this is not one of the ones that's up 50%, 40%, 30% comparing to the same time last year. They're actually down in terms of new listing volume. So big change. And again, this is why you got to watch. Each area is different. The amount of supply, the amount of sales that are happening is different in each area. So you have to make sure you're watching it, because right now in Simcoe, we're not seeing that same amount of new listings hit the market. Coming into our actives, same thing. Not as high as some of our other years, which is great, because the story that you're hearing on the news and the story that we're seeing in a lot of other locations, highest active listings in a lot of areas, we're not seeing that for the freehold market there in Simcoe at the moment. Yeah.
Yeah,
Okay.
I think sales is the anomaly here. It's we're starting out at the lowest
Yeah.
since 2018, but we're right on par with 2024. I think looking at the sales activity, it's sluggish. It's sluggish.
Yep.
Um, but the one bright spot is that when it comes to new and active listings, that's slowing down compared to a lot of other areas.
Yeah. Yeah, sales might be down, but our active listings in that aren't up as high as we're seeing in other areas. So it's not as tough of a situation for the sellers that are in there. All right, Matt,
Uh-oh.
I can see you're adjusting this one on the fly. So
Let me see.
as we
What do
take a
we?
look at the Barrie freeholds, yeah, I would say the month over month increase there in median price, kind of nice to see. Again, up 2%. year over year being up 4%. Like Barrie freeholds, not bad for the owners there. And I think that one of the things that is an important conversation for buyers that have perhaps been sitting on the sidelines is, have I, like you talked about, you can't time the bottom of the market. If we're already trending up in Barrie, I think that in particular, again, when you look at their sale prices, they're still lower than everybody. They, not everybody, but the most, they got hit pretty hard. And so I think they've got a little bit, they're probably going to rebound a little bit sooner than others. So if you are evaluating it, now may be the time to jump into Barrie before that trend continues, because they're already ahead of a lot of other areas, both regionally and town-wise, in terms of the price growth.
Yep, I think you're bang on there. They've experienced a lot of the pain already, and when you look at the price, $702,000 for
Yeah.
the median detached home, it's an
Yeah.
attractive price for first time home buyers, for potentially new immigrants to Canada. It's just a good price point for people, and we're seeing that in the data. We're seeing
Yeah.
10% increase year over year in sales. We're seeing termination volumes super low. The above ask listing like price is down 17%. So
Yeah.
I think people are just pricing it right. Agents are
Yes.
pricing them right, and people are scooping them up.
Yeah. I think that's almost one of the benefits to Barrie, whereas some of your municipalities a little further south, they get that overflow from Toronto a little bit faster sometimes. So you're in that do I or don't I situation maybe a little bit more often. Or it's just people not paying attention. Because Matt, I think you and I can both sit down with a seller and say, hey, now's the time to do that strategy, and now's not the time to do that strategy, pretty comfortably based on what we're looking at in terms of months over months of inventory, in terms of looking back at our last 3 months of sales volume. What can we expect compared to what's available now? How do you sit in the price brackets? It's usually pretty easy to decide when you're going to use that strategy or not, unless you're just looking at some overall data or basing it on what we did this time last year, and looking at seasonality. So I think that the agents in Barrie or the homeowners in Barrie have been much more realistic with their pricing, which is why you're seeing that we're not seeing so many more above asking. We're seeing healthy price growth. I love 4.8%. I think that's fantastic. And again, much more sustainable than the huge ups and downs that we've seen in other years. When we take a look at our new listing volume, again, Barrie trending downwards in comparison to other years, which is fantastic news for the homeowners in Barrie. And again, just that little bit less of choice for a potential buyer coming in. Even active listings holding true to that, Matt, not hitting the new peaks as we've seen in so many other areas.
Yep, still below 2018, 2019, which is good to see, especially with interest rates being higher than they were 2018, 2019. So not seeing a flood. So I think that's holding up quite well, given where interest rates are right now.
Yeah, absolutely. And so we are up again. We are up in terms of active listings over 2024. It'll be interesting to see if we can cut under that through as we get maybe hopefully a later push, or if that's something that continues on as we go. Now, when we look at median price, again, not bad in comparison to other places, and we're seeing a median price that is above what 2024 was at this time of year. Your to note for everybody looking at the February line there, Matt, I think you pulled this as of Monday. So was it the 10th or in that range?
It's
It's
the
just the
11th. It
beginning of
should
February so
be
far.
it's 10th or the 11th. See
Yeah.
if we got the
Okay.
bar there.
So
It's the 12th.
the 12th. Okay. So just yesterday. Just yesterday, I think it was.
So
Um,
we're
oh no,
seeing
sorry. Today is the
the
12th.
elevated price. It is only 12 days into the market.
Yeah.
But we're on the right trajectory for price wise when it comes to Barrie as compared to what we've seen in prior years. So 2024, we're above the trend line of 2024. It's a great sign. It's a great sign for Barrie.
Yeah.
I know some of the data points are still a little weak, but I think when you factor in all the underlying stuff, you're seeing that you can see down the road that there is going to be some strength there.
Yeah. Yeah. It looks so far the outlook is strength in Barrie there. Now looking at condos in Simcoe, median price being down year over year. up slightly month over month. I think I'm wondering if we're starting to see that rebound there as a whole in terms of their pricing, because we are trending upwards. Again, down over last year, but trending upwards over the previous month. Our transaction volume over the same time last year up 69.7%. You know, I love seeing these numbers coming out of Simcoe, especially knowing how hard their condo market got hit there for a while. So it's tremendous to see. Now we are seeing new listings and new listings up both month over month and year over year in comparison.
One interesting part there is the median days on market last year was 72 days was the average.
Yeah.
And they've got that down to, they're still high at 57. I mean, this
Yep.
is a small sample size as compared to if you're looking at Toronto or some of the places in the GTA. This is only 56 total transactions. Um, so sometimes you'll see some year over year percentages skewed depending on how big the unit sold month to
Yeah.
month. But I think the fact that the new listings is up 28%, transaction volume though up 70%, that's one of the big
Yeah.
signs for me is more sales, and also the median days on market falling off a cliff down 20 from 72 days to 57. So hopefully that continues on the
Dramatic
downside.
increase. Yeah. That's
Yeah.
fantastic.
So
I,
that's a good sign.
I think while we're acknowledging that, of course, when we talk about the percentages, we are doing a smaller sample size. So you will see those percentages, perhaps exaggerated a little bit. But the flip side to that argument is because you're dealing with a smaller area in terms of the amount of condo buildings that they have, what I can tell you is that the buyers and sellers will feel this difference because it's not lost in a sea of other buildings. When all of a sudden this many more homes are selling, when you're jumping from 33 up to 56, it makes a difference. You'll feel it. Buyers that are looking, they will notice, oh man, a few of those showings that we went on have now sold. Sellers looking, hey, some of our competition is clearing out, or hey, we were the ones that sold. So I think that, yeah, smaller sample size, but the cool thing is when you're out shopping there or when you own there, you're going to feel this difference. Oh, let me roll back there for a second. Looking at the bulk when we're seeing our condo apartments, where is the pricing? And when we're looking at what's active, the bulk of the condos that are active right now in the Simcoe area is that 500 to 600,000, and the bulk of the sales happening in our 400 to 500,000. So again, that trend of the bulk of actives, the highest is just in the price category above where the sales are happening. But nonetheless, and like affordability, you're able to buy for less when you're in Barrie or when you're in Simcoe in general. But there's some pretty sweet spots in Barrie to have a condo where you're right by the water, which is not bad at all. I mean, if you're talking about trying to buy downtown by the water, look at the options you have here.
Yeah, I would say anywhere between 500 and 700,000 for the people that are active in those areas, 62 and 88. You've only got 19 sales. You've got 16 in the half a million to 600,000, and only three
Yeah,
from the 600 to 700,000 as compared to 62 active listings. So there's a little
yeah.
bit of
A little
um,
sluggishness there.
yeah,
Yeah. Yeah, I think the homeowners there will feel the competition and the buyers will feel the choice. So again, if we're seeing things starting to trend upward in that area and you can still buy with choice today, I think that that's a fantastic thing to be mindful of. And again, you're going to go out, you're going to sit down with your agent, you're going to evaluate the opportunities that you have. But when I look at those numbers, to me, it still says choice.
yep.
Popping over for my friends here in Durham, we're taking a look at the freeholds. Now, our year over year has kind of held that trend of January's been I don't know what's going on in January with everything in the news, but for the median price to hold fairly steady at just down 0.4%, not bad. We're seeing more of a decline there in our month over month. New listings, again, we're talking freehold, so that's detached semis and towns that we're looking at specifically. We're seeing a big increase there in new listings seasonally, month over month. In our year over year numbers, still up 44%. So there are more listings that are hitting the market. I do like to see that the median days on market has come down. Terminations up, Matt, but not as high as we've seen in other areas. So I think that, part of the conversation that we've had with Durham is not only did they get hit earlier, but they actually did a better job at maintaining a lot of their values than we've seen in other places, in terms of our percentages anyway.
Yeah, I agree. But the end of the day, underlying stuff that's telling us sales down, new listings up.
Yeah.
Um, Days on market dropping, but it could be a factor of some of the termination dates and then relisting and selling in a short period of time. But
Yeah.
still some things to watch and seeing how February goes to see if this can turn around for Durham.
Yeah, interesting to see that we're almost, 4 in 10 homes are selling above the asking price. 38.3%. We're pretty close there, and that's interesting to see. Up up just that little bit, up 24% from last year. Um, so that one, I think it comes back to me when I look at those. I think the argument is there are certain products, there are certain homes out there that will always demand that kind of attention. They don't come up often. They're in a unique spot. They've got the ravine. They've got the floor plan that everybody wants. And you can hold offers on those properties because you will get the buyer turnout that you're looking for. And I think with sales having come down so much in a lot of areas, that I think that while we still have those handful of homes that will always command it, that's why we see those percentages go up. And so if you've got somebody that's saying, hey, I heard in the news that more homes are selling over asking, well, let's slow down a little bit and figure out why that's happening or what exactly that stat means. Taking a look here at our breakdown in terms of by price, again, looking at our detached semis and towns, we're seeing the bulk of our active listings here in the million to 125. Matt, what a surprise that price point just seems to have the bulk of the homes these days. Now, we're seeing a different side of the sales volume where we've got kind of three categories that are all vying closer to that top spot when we're looking at 7 to 799, 8 to 900, and then the million to the 125 in terms of where the bulk of the sales are happening in Durham.
Yep, affordable homes are definitely moving in Durham.
Yeah. Uxbridge, a lot of beautiful stuff out in Uxbridge. It's the king of Durham. You know what I mean? They're sitting up there at top in terms of highest median price at the 1,150,000. Whitby coming in second at the 1,006,000. Pickering, no surprise there at 985,000. I mean, you're closest to the city, easy transit. It's a great option for a lot of people. Ajax, Scugog dropping down. Oshawa in second last, Brook at the bottom. And I think, again, looking at the bulk of what kind of home types we're looking at Durham right now, 73% of everything that's sold was a detached home, 78% in terms of our active listings. So buying those detached homes out there in Durham. Taking a look at the condos, same month last year, we're up in median price. Durham bucking the trend in terms of what's going on in the condo market. Love to see that transaction volume up as well, month over month, down year over year. January is January has been the theme of the day, but a nice little change, I'd say, in terms of where we were looking at.
Yeah, that new listings onslaught
Yeah,
though at 75% is definitely something to keep an eye on and see how that shapes out. 35 sales, and termination volume was 61%, which is pretty high, and 103% month over month on the termination side. So that's quite a bit.
yeah,
That's where you're starting to see more than one property terminate twice, I would
yes,
assume, at
yeah.
103.
Yeah, I agree. And so, yeah, interesting. I love that I got to share the good news at the front and you got to come in with the new listing volume trailing
I'm
at the
always the
end.
bearer of bad news.
just the way I like to keep you there, Matt.
Yeah.
Looking at our active listings by price range and our sales volume by price range. Active listings in the condo market out in Pickering or out in Durham, 500 to 600,000, where you're going to find the bulk of those homes for sale. And funny enough, this time that's also the bulk of where we're going to find our sales happening. I mean, it makes sense in the condo market. We're not typically negotiating that far down. Clearly, pricing is working well out there. We do see the second biggest bulk there from 400 to 500,000 in terms of our sales volume. So, again, more affordable condos in terms of what we're looking at when we go to Durham. All right, Matt, lease report. First, we've talked about rentals more than once on our show, and the various things that are impacting them, where we're talking about, students, the amount of student visas being accepted going down, the amount of our NPRs going down, the amount of them leaving. And we pivot that to, of course, how does this impact investors that are owning these and renting them out? But at the same point, what does that mean for our market? So I'm glad that we're giving this the highlight that it deserves today. And before perhaps we get into it, where's your mindset been at when you've been taking the time to evaluate what's going on in the rental market?
I think that we've been building a lot of rental properties, not only purpose-built rentals, but also a lot of the condos are coming online as well. And we're starting to see the numbers show that we might be getting a little bit too much supply on the market. We also know that the federal government has come out and said that they're going to be scaling back non-permanent residents, and also cutting back on how many people can come to the colleges and universities. So in certain areas, we're going to start seeing pullbacks where the bulk of these individuals might live. And were we building too much for certain areas that just aren't going to see those influxes of individuals? So that's something I'm keeping an eye on, because typically when housing is expensive, your rental market will pick up because people can't afford to buy. But we do have an expensive market where, because of interest rates, but we're seeing a softening in the rental market, and that's the intriguing thing for me right now to keep an eye on. Is we are seeing that softening right now.
Yeah. Okay, so when we take a look at York, we're seeing our median price come down that 3.8% month over month. Kind of same thing. We were at 2,800 previously, down to 2,790. Transaction volume up a little bit, which is a nice change when we're talking year over year, but up month over month as well. So we're actually seeing, who wants to move in the middle of winter? Well, here we are, December and January. We're seeing not bad numbers coming out. New listings are ticking up, and termination volume being up a little bit. Yeah, year over year, I get it. It's not usually that you get pricing that wrong on the rental market, but Matt, I think that's the story to look at. Is as we've looked across the board, like across Canada, even seeing those rental prices start to come down. Maybe there are a few people that are getting it wrong in terms of their advertising price for the rentals.
Yeah, I think. I think when we get to the active listing chart for the last 8 years, we're going to see that it's consistently having more and more
Yeah.
active listings piling up here, and it's getting to a point where the economy is a little bit shaky right now, and at the end of the day, I think we've piled up quite a bit of you can see prior to 2022, there was a very stable ebb and flow to the amount of listings that there was on the market. And now we've seen quite a big impact here, and it's starting to show up in the prices.
Yeah, like if this not scientific at all, but if I draw my trend line right through here, you can then see where we've gone, since 2022 in terms of active listings. And it's funny how directly that correlated with our interest rate increases, right? You've got investors that were likely on variables a lot of the time, and rates go up, and changes need to happen.
And again, if I was to draw those blue lines like we did with the months of inventory through the Januaries, typically these active listings are rolling over in January. But we're seeing an acceleration in active listings this January.
Yeah, absolutely. Looking at our lease price, again, it trended upwards specifically through those years, right? Homeowners are paying higher prices, need to rent them out for more. And then we saw a little bit of stability start to happen there. And now we're seeing that downward dip just start to happen. It'll be interesting to see where this goes. I mean, at the end of the day, housing is still an issue. But I think when you look at a couple of key areas, this is going to get hit harder, right? And so I think that the overall trend, you will see this continue to move down just a little bit.
Yeah, and based on this chart, we peaked out just at the end of 2023 for rental prices.
Yeah. All right, looking now in the GTA, here's the bigger change in terms of median price, down 6% year over year. when we're looking at it. And again, are we losing a lot of students? Yeah, that's starting to happen, right? And I think that that vacancy rate is climbing, and that's why you see the softening in price as well.
Yeah, softening on the price, but you know what? An uptick in the transaction volume, and also, not a significant year over year increase in the amount of new listings.
Yep.
But I would imagine that the active listings is going to look a lot similar to York when we get to that chart. But yeah, it's a big pullback at 6.3, but it is January. And typically not a ton of people are vying to be moving in this weather.
Yeah, absolutely. When we're looking at our lease price, like we said, you kind of see that run up there after 2021, maintain just slightly, and now we're dipping just a little bit in the GTA in terms of our median price. Active listings, since 2022, that has increased, and that is the same trend that we saw in York.
And we can see in 2020, we can see that big peak when COVID happened. A lot of people moved home.
Yeah,
So we had a lot of apartments, condos, houses go up on the market. Um, and we're surpassing those numbers now of how many active listings we have for rental properties.
yeah. Look at the amount of people that have moved home, just like COVID years all over again, in terms of our
That's it.
active listings. But that's what that was. That was that big run up in terms of active listings, was everybody breaking their lease and getting out there. Do you want to be stuck in an apartment building during all those lockdowns that we were on? It was a rough time for a lot of people. I know some people that decided to go home as well. If I'm going to be locked down, might as well be on the parents' place with a property.
That's it.
Right?
But going back to active listings there, the Canadian government can't really keep track of how many non-permanent residents and these students go back home. When you're leaving, they don't give you a questionnaire saying, "Are you leaving for good? Are you coming back?"
Yeah.
So I think what we're seeing here is a combination of not only a significant amount of more new property coming to the market, but you're
Mhm.
also seeing an exodus of non-permanent residents and students that isn't being calculated. And I think that's why we're seeing this drive up, especially as steep as it is right now going into the January. Because like I said before, typically in January's we're seeing a rollover of active listings. We're actually starting to see the spike. We're seeing a spike earlier in the year to those active listings. And I think that's kind of potentially what's going on there.
Yeah. Taking a look at the lease volume, interesting to see this drop off in terms of lease volume peaking there in July. And again, this is why those active listings are starting to pile up.
And I think the reason that I highlighted July 24th and just how many transactions we had there was because Canada was also setting records on individuals brought into the country. Um, we've been setting records every single year since 2015. So, and then
Mhm.
they've only grown more in the last couple of years. But I think it all come to a head last summer, because it was after last summer that the government came out and said, okay, you know what, we need to do some decreases in these numbers. So it'll be very interesting to see come this summer if how much lower potentially the total lease volume will be in the GTA as compared to last summer.
Yeah, because in terms of starting years, we're above where we started, of course, in 2024 still in terms of our lease volume. So that part's not that bad. It'll be interesting to see when this actually does truly roll over in comparison to the previous years, because I think there will still be that lag effect. The question will be, how quick is that? Is that a short term thing, or is it going to be more long term? Matt, this is one, like I said, every time I love taking a look at this because it shows clearly how much I guess our economy news and the outlook is changing, because we base a lot of that here in terms of what the Bank of Canada is going to do. And now it does look like we're going to stay at 3% in March, whereas before we might have got that cut. That's been pushed back a little bit till April, where we'll probably come down to 2.75. But the change here from our last one is that we might actually get down to 2.5, which is 68% chance at the July meeting. And earlier, or I'd say in the fall of last year, it looked like 2.5 was going to be a very realistic thing. I know Ron Butler was talking about that, and then that kind of came off the table a little bit, and now we're back on. So I think it's one of those things, like it's ever changing, right? But if this is the change that we see, we are going to see rates continue to come down, specifically when we're looking at the Bank of Canada.
We are. And they're going to come down to about 2.5%, and we'll see in later charts just how that stacks up to how interest rates have been in the last 20 plus years. But
Yeah.
um, this was pulled on February 9th. The US CPI data just came out today, and it was relatively strong. And there was some talk on some online forums that expectations out of the US was that they might get a rate cut in September, but now that's been pushed to December because of the strength in the CPI data this month. So it'll be interesting to see how this chart readjusts to this. But I think it's fair to say that, um, we can for now expect, I think it's fair to say this year we're going to get two cuts. When they'll come will depend. But as of right now, like you said, we'll get one in April and we'll get one in July. And as far as that, we'll have to see how everything readjusts. But yeah, it'll be interesting to see next week how it adjusts to the U.S. CPI data if they push it out a little further to maybe June and July rate cuts instead of April. But
Yeah,
I don't
interesting.
know.
It could be, and I mean, we've talked about how they like to do that in the past because they don't want to inflate anything during the spring market. So it could be delayed. Maybe that April one does move to.
I don't know. Maybe they will do something in March if these numbers persist in February for the housing market.
Yeah, they won't be as worried about it. They'll be like, okay, I think we can throw the real estate market a bone here. At the
Yep.
bottom here, we have a basket of 10 lenders, including CIBC, BMO, TD, Scotia, RBC, National Bank, Desjardins, on and on. And just look at the change here. Like all these rates, again, because it's the average of 10 lenders, you can beat this in other places. But the important thing to note is the 30-day change in these averages is, we're down 25 basis points for our 1-year fixed. Looking at our 5-year fixed as well, down 25 basis points. So we're starting to see that movement in the fixed rate market as well, which is where a lot of people feel most comfortable. There's been a couple of great videos out there recently that I've watched where people have been betting well in terms of the variable rates as well, for those people that are open to a little bit more risk or feeling a little bit more savvy. And then seeing these drops here in their fixed rates, they're coming out now below where they would have when they had to close last year. So if you're open to risk, there's ways that you can still beat the market in terms of the amount of interest you would pay on your loan. But at the end of the day, if you're feeling more comfortable in a fixed rate environment, it's nice to see these drops happen. Yeah. All right. I don't know what I pressed there. When we take a look at the policy rate forecast for the big banks, Matt, talk to me this one. And I almost want to start with RBC because we talked about them at the beginning of the broadcast here. And like you said, who's got the most to gain from a forecast of a 2% rate coming Q4?
I mean, that's RBC. If they're the only ones doing these large blanket, and we don't know if other banks are doing it. The only stories that we've heard through the Globe and Mail and some other people reporting is that it's primarily RBC. And it's funny enough that they're down at forecasting 2% by the end of the year when you've got BMO at 2.5. You've got Scotiabank holding steady at 3% all year long. You do have TD Bank and National Bank and CIBC down to the 2.25 range.
Mm-hmm.
I personally, my call is maybe 2.5. This is all assuming there's no tariffs. If tariffs come into play, this is a completely different story. They're going to have to stimulate the economy. But it is interesting to see that RBC has, because what would 2% do for RBC? Well, if they did do blanket mortgages, it would, a 2% rate would definitely potentially do an uptick in prices
In the market, yeah.
and that would help lessen the blow of these net negative mortgages that they have out there.
Yeah, I agree 100%. And it's funny seeing Scotia hovering there at the 3% the whole way through. Because Scotia, it was one of their economists that came out and said, "Hey, if tariffs come into play, maybe we combat that with raising rates." So it's it's funny. Everybody's sending their messages. I think that's one thing that we talked about last time is you got to take all this stuff with a grain of salt. All these banks have their own portfolios and their own interests to serve with some of these forecasts.
I thought it was interesting for Q4 2026, the last column there, that
Yep,
National Bank, they went as low as 225 in at the end of this year, but they have it going back up to
back up.
275 at the end of 2026.
Yeah. And that's a great thing to point out because they're the only one that then said rates go back up the following year from a
Yep.
year later of the end of 2025. So it's interesting to see. Looking at our bond yields here, which impact our fixed rates, you can see this downward trend. Now we did have a little uptick there earlier in the year, but has continued to come back down, which is nice.
Yeah, we had an uptick today because of the US CPI data. So it did bump up. But going back, we're still as high as we've been since 2011. So when we were
Yeah,
looking at the data points for 2018 and 2019, we can see where bond fixed, the 5 year fixed was in
yeah,
2018 and 2019. And, that was a restrictive area for the real estate market. The market was down and soft during that time.
yeah.
And we're still well above that as well. And even if we get another 50 basis point cuts, this might bring us back to where we were in 2018 and 2019. And it's still a bit of a restrictive area for growth.
Yeah, I think that's important to note. And again, if anybody's been telling you that we're going to see those big turnarounds in the spring market, well, look at where we were back then when that stuff was happening, right? We were under 1% for the most part when we saw all those big pushes in the housing market.
Yeah.
So important to note. Again, when we take a look at where we are in terms of our interest rate for the central bank, the Bank of Canada, hovering now at 3%, looking at potentially getting to 2.5. And like you said, that comes back to more financial crisis hovering around 2009,
Yeah.
fall of '08 there, right?
And it keeps us, we're still going to be well above where we were 2018, 2019 again for
Yeah.
those rates.
And again, when talking about people that are refinancing in both of these charts, I'll go back to the other one in just a second. Look at where we were in 2020 to 2022 when the bulk of those purchases were happening, both pre-con and in the resale market. The resale market in particular saw some of the highest sales volume we've ever seen. 2022 or 2021 clocking it at 120,000 sales, whereas we finished below 70,000 last year. I think that's important to note. And same thing when we look at the bond yields from that 2020 to before 2022. Now we're upticking a little bit in that fixed rate environment before 2022 hit. They're ahead of the game. They're usually ahead of what the Bank of Canada is doing. They saw the signs beforehand and started increasing there. But this is where we were back then. And so anybody that's refinancing now, we're looking at a drastic change. And this is the other warning sign in the market is the amount of people that are refinancing are coming in at a much higher rate than when they purchased. And we're seeing the bulk of that. I think among the top 6 banks, we were looking at 80% increase in renewals from this same time frame last year is what we're looking at. And we're looking at these high rates still. Awesome. All right, everybody. That is the end of our show for today. Matt, I got to say, that is the longest one we have ever done. We're sitting at 3:00 here now. That was a solid 2 hours of talking. I want to thank you guys that stayed with us the whole time. I see a couple of you still there. Thank you. We appreciate you. Matt, I think this is stuff that I know this is stuff that you and I are going to be talking about with our clients, specifically when we're looking at forecasts for what's to come, but as well as breaking down what's going on right now in our local markets. What are the trends looking like? What's my competition look like? What are the opportunities for me to buy? This is important stuff that you need to know. So yeah, Matt, I look forward to, as we continue to go forward, you and I, specifically with the economics of real estate, we've got lots of great information coming out there that will help you when you're making your home purchase or getting your home ready for sale.
That's it, guys. Well, like, subscribe, join
Yeah.
the economics of real estate. We're gonna break all these we're gonna break this video down to the specific
Yeah.
sections so that if there's an area that you're interested in, whenever we do this on a monthly basis, you'll have just the York region data, the Simcoe data, the Durham data. You'll
Yeah.
have the charts we have on the bond market and some of the economic stuff that's happening in their own videos so that you can watch them on your own time. And because it's a long video, it's 2 hours, it's hard to sit through this kind of data, but I think we bring a lot to the table here. A lot of important stuff was brought, and I hope it gives everyone a great idea of where we're potentially moving, and also how to have conversations with your clients, because you have an understanding of where the leverage is for you and your client and where it might not be.
Yeah, absolutely. All right. Well, stay tuned. We'll be back again next month. And on the economics of real estate page, we are there every single week with fantastic information for you to take back to your clients, or for you to use yourself if you're a homeowner or buyer. Thank you for joining us, and stay tuned till next time. Bye for now.
Bye, guys.